Father, in the name of Jesus, we thank you so much for such an opportunity given unto us today. We thank you for the life you have given to us. We thank you for the grace. We thank you for your presence. We pray asking for continual understanding, wisdom, and retentive memory so that on that day of accountability, we can be able to reproduce and pass our exams. This and many more we ask in the name of the Father and of the Son and of the Holy Spirit. Amen.
Amen.
Okay, so today we want to start with an important subtopic and a financial instrument that is IFRS 9. IFRS 9. Financial instrument recognition and measurement. Recognition and measurement. There are a lot of things that goes through into this. So want to look at they want to look at the first aspect. That is, after today's class, you should be able to identify the various classes of what financial assets. So we want to look at the key issues. So the key issues we'll be interested in the recognition criteria. So specifically for assets, that's where we have the problem. For financial assets. Share liability. Once we are now the assets, you know the financial liability too, so it's very simple. Then we can now look at the measurements. Under the measurement, we look at it from the point of view of financial asset first. We look at the three classifications and how it should be measured initially and then what subsequently. Initially and then what subsequently. So I think after this, you should be able to pause to pick some set of questions. That is, we'll add the measurement of financial liability to it. Measurement of financial liability. So this one to look at the initial and then subsequent measurement. So let's see whether we can be able to finish this. But my whole idea is on the first one, recognition criteria. That's the basis for everything. If the recognition criteria is wrong, if you give a wrong classification to the asset, automatically everything you will do there to be what will be wrong. So I don't mind if the remaining 3 hours is used to explain only the recognition criteria. So that when you see a particular financial asset, you're able to identify it. It's very, very important. All right. So from here, we can look at the effect of credit risk. which I'm writing in red because I know we won't get it. Then from here, we'll look at
Yes, sir.
interest-free loan.
Sir.
Yes.
Hello, good morning.
Good morning. We've just started there.
Yes, please, which course is it?
This is financial reporting, corporate reporting, and public sector. We are doing financial instruments.
This is corporate reporting.
Yes, please. Corporate financial reporting and public sector. We are doing a standard.
Okay, for which?
So we have subsidized loan. We have subsidized loan as well.
So please, we are
Then
doing this for CA or for UPSA?
this year, I think it means if I mistakenly sent it on your platform, then delete it. Please, UPSA, which platform did you see on?
The UPSA. So this is corporate reporting, right?
Now, Madam UPSA, which platform are you on?
I am on the what is the name? PSA platform.
I think I deleted it or something. Okay, so I've
But I want
deleted
to
it.
be part of. I want to be part of. This is corporate reporting, right?
Yes, you can join. So you don't worry.
Yes, yes. So after class, I'll call you and then we talk.
Right. So let's see. Let's see. So after that, then we'll look at an important aspect that is the impairment of financial assets. Well, we'll look at the general impairment, which is IS36. Then we now look at the expected credit losses, the use of expected credit losses. So that is that. All right, so let's look at it. So let's start with financial assets. Financial assets. We said that financial asset is recognized by the buyer. Is that not it? Is the buyer that recognizes financial asset. Is that not it? French, no, so.
Oh,
Uh-huh.
yes.
So now we are saying that whenever you are going to buy a financial asset, it is in two categories. It's either you buy a debt instrument or you buy shares. So if it's a debt instrument, we say that then you need to recognize loan investments. But if it's shares, then you need to recognize equity investments. Exactly. Hello. This is what
Right.
we learned. So for financial assets, we'll be looking at how to deal with loan investments and how to deal with equity investment. It's very important. Very, very important. So let's look at the loan investment first. Let's look at the loan investment first. But before we look at that, we want to say that financial assets are classified into three. Financial assets are classified into three. Now, on what basis? On what basis was financial asset classified into three? So, basis for classifying financial assets into what? Into three. So, all what we are going to do today is to be able to identify a specific type of financial asset. So, on what basis were financial assets classified into three? On what basis? The basis are two, and that will be the recognition criteria. That is the business model objective. Always you need to check the business model objective for acquiring the asset. The business model objective for acquiring the assets. And then you look at the contractual cash flow test. The contractual cash flow test. So the business model objective, we are looking at the purpose for acquiring the asset. The purpose for acquiring the assets. Is there anyone here who has bought shares before? Anyone here who has bought shares before? Okay. Anyone here who has bought treasury bill before? Now, treasury bill or fixed deposit? Anyone here?
Yes.
Yeah, good. So raise your hands. I want to ask you a question. A simple question. So, who is the first person? Oh, no hand raised. So, those who have bought treasury bill before, I want to ask you the purpose. Why did you buy the treasury bill? What was the purpose for buying the treasury bill? Hello? Well, you just went to buy treasury bill because you just wanted to buy for no reason. That one too is there. Yes, Madam Tina, why did you buy for what reason did you buy the treasury bill?
For no, not a fixed deposit for a future project.
For a bedroom project.
Yeah.
Okay, so your intention was to buy the fixed deposit, keep it up to the maturity date to be able to get some interest and add your principal to put up your building project. Is that not it?
Yes, please.
So hers is to keep, to receive contractual cash flows. Cash flows. Who else has a different purpose? Cornelius. Abena. Oh no, you can talk. You've all bought fixed deposit, treasury bill, shares before. I just want to know why you bought it, so that it will fit into what we are learning. Yes. Mr. Osman.
Yes, the purpose was to invest an idle fund.
Okay. So the purpose was to invest an idle fund. So Senior, hello Senior, your personal idle fund, right?
Yes.
So let me ask the next question. So the idle fund that you invested, did you have the intention of keeping it up to maturity, or anytime there's a need to go for the money to support an activity, you just go and then take your money?
Yeah, the idea was to go for it anytime I need it.
Okay, so he has another purpose. The other purpose is what? He's keeping it all right, but he can also sell it at any time when he needs money. Please, you get it? To keep and sell, to receive what? To receive contractual cash flows. Then any other purpose, some may do the investment without any reason. Did you get it? Any other purpose also falls in another category. Any other what? Purpose fit into another category. I'll give you the categories. But what we are talking about, the three categories, which of them fit into any of those that we have discussed here. Then the contractual cash flow test, we are looking at the characteristics of the cash flows. We are looking at the characteristics of what? Of the cash flows. The cash flows that will be received by the holder. What are its characteristics? Some will receive principal plus interest on principal outstanding. And then some will receive principal only or interest only. So always we'll look at the business model objective, then we'll look at the characteristics of the cash flow. So these two will tell us that this financial asset there is this type of financial asset. Is that clear? Please, is that clear? So now let's look at the three classification of financial assets and how it fits into this. How we can use this to determine their recognition criteria. Please, do you understand what I'm doing?
Yes.
This one is the basis. Financial assets are classified into three based on the business model objective and the contractual cash flow test. So they can ask you of the basis for classifying financial assets. Okay. Now, so now let's see. Now let's look at the recognition criteria. The recognition criteria. We are starting with loan investments. Loan investments or debt instruments. Recognition criteria for loan investments. investments are classified into three. I said they are classified into what? Into three. So we are going to look at the type of financial assets and the recognition of criteria. Look at the type and the recognition criteria. Now, just my hand is up, sorry.
Yeah, some people are leaving their video on, so you have to let them know.
Please off your videos for us, so that we don't see things. It's too early for us to see things. After all, the one who see things will come and check. Okay, so we have the type, then we have the should have included just a minute. So we have the cognition criteria, then we have two issues. Okay, so this is the recognition criteria. So we have the type of financial assets, type of financial assets. Now, for each financial asset, the recognition criteria, we are going to look at the business model objective. The business model objective and the contractual cash flow test. The contractual cash flow test. Now, type 1. We are looking at financial assets. Financial assets measured at amortized cost. Financial assets measured at amortized cost. Or you can say financial assets at amortized cost. Now, this one, the business model objective, the underlying word is to keep, just to keep or to hold. To keep. The underlying word is keep. I want to underline it. Keep. Keep. To keep. To receive. To receive contractual cash flows. And then there's another type of financial assets. That is financial assets measured at fair value through OCI. Financial assets at fair value through other comprehensive income. through other comprehensive income, OCI. So financial asset at fair value through other comprehensive income. This one, the business model objective is to keep and or sell. Hello? He's keeping it all right. Like our honorable said, he had an idle fund and invested. Anytime he needs the money, he will just go for it. He doesn't care whether it has matured or not. He will just go and take his money and then take whatever interest they will give him. Did you get it? So that's another purpose. To keep and or sell, to receive contractual cash flows. So you see, that's the difference between financial assets at amortized cost and then at fair value through OCI, if it's a debt instrument. Okay. Now, their cash flow characteristics are the same in terms of the qualitative characteristics, but the amount cannot be the same. Take note, I'm saying that the characteristics of the cash flow are, this one is principal plus interest on principal outstanding plus interest on principal outstanding. So if they ask you of the characteristics of financial asset at amortized cost, you say that the business model objective is to receive contractual cash flows, which are mainly principal plus interest on principal outstanding. The difference is that the first one at amortized cost, because the intention is to keep up to maturity, you are going to receive the full interest on the principal. But the financial asset at fair value through OCI, that one you can sell part at any time. So if during the year some part has been sold, it means that the interest that you get on maturity will be different. The principal that you get will be different. Did you get it? Did you get it? But we are still saying that the characteristics of the cash flows is what principal, which can change. This principal may not, for the financial asset at amortized cost, the principal we are talking about is the original principal. But the one at fair value through OCI, the principal can change depending on whether they have sold part of the instrument during the year. Did you get it? So this one is also principal plus interest on principal amount outstanding. That's principal amount outstanding. We understand these two so that we take our time for the last one. Do you understand these two?
Yes.
Was the contractor cash flow test again, please?
Oh, but there is principal plus interest. Principal plus interest. Just that if it's fair value through OCI, if part has been sold, then it means that the interest will be computed on the principal outstanding. I get in the remaining amount. It means that the interest and principal may not be the same under each of these types. Did you get it? The
Yes,
first
sir.
one, the original principal, and then you have your interest up to maturity. That's at amortized cost. But at fair value through OCI, the interest can change and the principal too can change, depending on the amount that is sold. Well, you said you can sell it at any time before maturity.
Okay, sir. So it means it depends on the business model objective.
Of
Whether
course,
I
that's
keep it
what we have written.
security. Okay. I understand.
Okay, so take note of these terms. At amortized cost, you use the term to keep. To keep. At fair value through OCI, use the term to keep and sell. To keep and or sell. Did you get it? Okay. So the difference is that amortized cost keeps up to maturity. Fair value through OCI also keeps though, but also has an intention of what? Selling at any time before maturity. Do you see the difference?
Yes, sir. Yes, sir. Yes, sir.
Yo, because if a
Sir,
question is there and you are not able to identify that this one is this type of financial asset, this one is this type of financial, if you wrongly classify, you get zero. You get zero. Okay.
Sir,
Yes.
it's a true order. I mean, the word is not clear.
Other comprehensive income.
Okay.
Okay. So let's move. Then we have financial assets at fair value through profit or loss. So this class, I believe that I have different tribes here. I thank God for that. I'm going to explain after that. You also explain in your local dialect. Did you get it?
Sir, please let me send you back and forgive me. I can see the principal plus interest on principal outstanding, and then the principal plus interest on principal amount outstanding.
It's the same
What's
thing. It's the same, please. It's the same thing.
is
We
the
have
same thing?
see the same thing. Master, principal and principal amount different. So,
Well, this is accounting. We are dealing with principles.
oh, David, we are the same. Okay. So now, if the loan investment does not meet any of the first two criteria, that is amortized cost and fair value through OCI, if the loan investment does not meet any of them, then it is at fair value through profit or loss. Did you get it? Any other debt or loan or investment? So, for example, where example where only principal or only interest will be received. If you are going to receive only principal or only interest, then it does not fit into any of this. Exactly. Did you get it? Please, oh, and a loan can pay an interest of 0%. That one, there's an interest, just that is 0. Did you get it?
Wait, no.
You can have a loan and they will say that it's a 0 coupon loan. It has an interest. The interest is 0. Sometimes these 0 coupon loans will be redeemed at a premium. So the premium
Oh,
will
okay.
result in what? An effective interest
Yeah.
rate.
Okay.
Okay. So for example, where we are talking of financial asset fair value through profit or loss, if the instrument will pay only the principal or only interest, then it cannot fit any of the first two criteria. It cannot fit into any of the first two criteria. So we measure it at fair value through what? Through
Profit and
profit or loss. Through profit or loss. And then where you intend to trade in the item, for example, your intention is to buy it, those who have this yield to market investment. The yield to market investment, if the market is favorable, you earn more interest. That one, they have varying interest rates. Is that not it? If the market is favorable, you get more interest. If it's not favorable, you lose. That's what people didn't check. And they lost a lot of their investment under the sorry. All right. So in Ghana, here, people make investments without consulting the experts. You see, many people were making investment with data bank. And this investment with data bank with high interest, it is yield to market. So yield to market means that if the market condition is unfavorable, the amount of investment will be reduced. In fact, it will even affect your principal. You lose the interest, you will losing part of your principal. I get it. So even though there was a haircut, that is the domestic debt exchange program, there was a haircut. The haircut affected these businesses. And because market conditions were unfavorable, they have to reduce. You see that the investment value was reducing. But if it wasn't how do you call it, mark to market, if it was not mark to market investment, then nobody could have reduced your interest or your principal. But most of the investment with data bank were with high interest. So it was mark to market. When the market was favorable, they were enjoying until the domestic debt exchange program came. And some lost a lot. Some lost more than 50% of their investment because it is marked to what? Mark to market. Mark to market. So when you are going to do investment, take your time, if possible, take the document home and then go and read. It's very, very important. Go and read. Treasury bill, for instance, is not mark to market. So that is why treasury bills were not really affected. But for bonds, it was a haircut. I get it. It was a haircut that was on it. We are looking at you buying investment from a company. And we are saying that the company may have favorable or unfavorable market conditions. So it depends on the characteristics of the loan investment that you bought. If it is mark to market, then it's just going to affect you. You understand? So what I'm trying to say is that if your intention is to trade in the loan investment, like you buy maybe this bond today, then the next time you sell it and you go and buy another bond. You sell it, then you go and buy another thing. Sell it, then you go and buy another loan investment. Then you are trading in it. So that one too doesn't fit into any of the two. So that one too will be at fair value through what? Through profit or loss. Okay. So as you have said, any other will fall under fair value through profit or loss. But we cannot explain financial asset at fair value through profit or loss without explaining the option to designate a financial asset at fair value through profit or loss. Option to designate a financial asset at fair value through profit or loss. Through profit or loss. Option to designate a financial asset at fair value through profit or loss. Now, listen to me carefully. After that, I will ask you to explain your local dialect. This is what the Sana says. He says that on initial recognition, that's what the Sana says. So this one, let me on my video so that you can get it well. The Sana says that on initial recognition, the entity may by an irrevocable election opt to designate a financial asset at fair value through profit or loss. If doing so, eliminate or reduces a measurement inconsistency, also known as accounting mismatch. Do you understand? Do you understand?
Yes, sir.
Hello, do you understand?
Oh, you can
That
take it again.
the one saying yes,
Okay.
can you explain to us? I'm saying that on initial recognition, the entity may by an irrevocable election opt to designate a financial asset at fair value through profit or loss. If doing so, eliminate or reduces a measurement inconsistency, also known as counting mismatch. You see that there are some big grammar there. Is that not it? So we need to break it down. So in simple terms, he's saying that at inception, that is on that particular date that you buy the asset, you may make a decision or make a choice that cannot be reversed to recognize the financial asset at fair value through what? Through profit or loss. But the purpose should be to reduce what we call accounting mismatch. So now the question is, what is accounting mismatch? Accounting mismatch is just the measurement inconsistency that exists in recognizing the element of financial statement. Let me give you a whole set of issues in standards that without those issues, it would have resulted in accounting mismatch. You see that when you go against the matching concept, you will be doing an accounting mismatch. Now, for example, let's start IA 16. IA 16 says that revaluation gains and losses goes through the revaluation reserve. But the revaluation reserve account cannot be what? Negative. So if there's a revaluation reserve, that if there's a revaluation loss, that will make the reserve account be negative. You take it to the profit or loss. That is not the final resting place. So whenever there's a subsequent gain, you quickly go and reverse the previous loss in the P&L before any remaining gain is taken to the revaluation reserve. If you fail to do this, you create an accounting mismatch. Let's go to IAS 20, government grant and disclosure of government assistance. It says that the grant should be allocated to the profit or loss in the same way and manner the expenses are incurred. That is, if you are dealing with revenue grant, you are incurring some expenses. You have gotten a grant to subsidize it. So in the same way and manner the expenses are incurred, make the allocation of what? Grant. In other words, if the expenses will be incurred evenly for 3 years, then the grant received should also be allocated to the profit or loss evenly for what? For 3 years. Come to capital grant. He says that in the same way and manner depreciation is charged, the transfers will be made. So if in the current year you are charging depreciation for 3 months, then only 3 months of the grant also be transferred to profit or loss. If you fail to do this, you create an accounting mismatch. Let's go to borrowing costs, IFRS 5 and IAS 23. It says that if you earn an investment income during the period where borrowing cost is capitalized, then the investment income should be used to reduce the borrowing cost to capitalize on the asset. But if the investment income is earned in periods where borrowing cost is not capitalized, that is, in period where borrowing cost is taken to profit or loss or statement of financial performance, then the investment income will also be taken to the profit or loss account, or if it's public sector, statement of financial performance. If you fail to do this, you create an accounting mismatch. Let's go to IAS 36 impairment. It says that impairment, we know it's treated in the profit or loss account. But if the impairment is caused by revaluation, then it will depend on where the revaluation difference is treated. If the revaluation difference is treated the OCI, comprehensive income, then any impairment caused by that revaluation also be shown under OCI. If the revaluation is treated in the profit or loss, then any impairment caused by the revaluation also be shown under profit or loss. If you fail to do this, you create an accounting mismatch. Let's go to income taxation, IAS 12. It says that any deferred tax caused by revaluation is treated at where the revaluation difference is treated. So if the revaluation difference is shown under OCI, then the deferred tax caused by revaluation also be shown under OCI, under other comprehensive income. You dey or you know dey?
We did.
I was trying to explain accounting mismatch so that for the same item.
We did, but what been?
So we are trying to
Me say, what
explain
been? What been?
accounting mismatch. We are trying to explain accounting mismatch. Now, so let's come back to the option to designate a financial asset at fair value through P&L. The standard says that on initial recognition, the entity may, by an irrevocable election, court to designate a financial asset at fair value through profit or loss. If doing so eliminates or reduces a measurement inconsistency, also known as accounting mismatch. Let me break it down in simple terms again. Then after that, I'll now come back to you. And then you say it in your local dialect. At inception or at the acquisition of the financial asset, the entity can make a choice that cannot be reversed to recognize the financial asset at fair value through what profit or loss. But the purpose should be to reduce accounting what mismatch. Is this not simple? Friend, is it not simple? Me, I'm a fancy, so it's the fancy that I can speak well. So I will say it in fancy. Then you can also say it in your different local dialect for us. Did you get it? You people don't even understand French. Okay, I will try my French and see. Okay, somebody's hand is up, Rob. This your Rob. Is it normal Rob or Robert?
It's your Robert Sam.
Okay.
So please, I want to know. So meaning that if classifying it, uh, eh, the financial assets at fair value through profit or loss, it will not create. It is not because of accounting inconsistency, meaning that you can't do that.
No, you
I'm
can.
not.
You can. If it does not meet any of the first two criteria. So number one is that if it does not meet any of the first two criteria, then it's fair value through P&L. And number two, if treating it under fair value through OCI will cause an accounting mismatch or through financial asset at amortized cost, if you do that and it will cause an accounting mismatch, then you should take it to fair value through what? Through P&L to avoid that accounting mismatch.
Okay. Thank you.
Yeah. So I am saying it in fancy. Then you say it in your local dialect for us. Mama Pedama Kenyina de se Jumokubi Otto ada wɔfrɛ no financial asset a dam bere na watɔ financial asset no obesi gyina dɛ ɔpɛ dɛ financial asset no wɔfrɛ no financial asset at fair value through profit or loss. Na dam gyina na obesi no ɔsesa n'adwene a ɔnyɛ dɛ nɛ ɔnyɛ yie. Na botan kyerɛ a ɔde si dam gyina ɔwɔ dɛ botan no ɔyɛ dɛ ɔpɛ dɛ oyi adze bi fi hɔ a wɔfrɛ no accounting mismatch. Tɔ asset. Dɛm bere no a ɛtɔ asset no, ebesi gyinaeɛ a ɛsesa a ɔrenyɛ yie. Dɛ asset no, ɛpɛ dɛ wɔfrɛ no financial asset at fair value through profit or loss. But botae a ɔte akyire a ɛde si dɛm gyinaeɛ no wɔ dɛ ɔyɛ biribi dɛ adze bi wɔ hɔ a ɛreyɛ fi hɔ a wɔfrɛ no accounting mismatch. Did you understand? So the few people say company and as I say dwumakuo bi ɛtɔ financial asset here. Saa bere na watɔ asset no obetumi esi gyinae. Ba saa gyinae no ɔsesa n'adwene a ɛnyɛ den ɛnyɛ yie. Obetumi esi gyinae a ɔntumi nsesa. Sɛ financial asset no yɛbɛfrɛ no financial asset at fair value through profit or loss. Na botae anaa dentire a ɔresi gya saa gyinae ne sɛ ade bi wɔ hɔ a yɛfrɛ no accounting mismatch ɛno na ɔpɛ sɛ oyi firi hɔ anaasɛ ɔpɛ sɛ ɔte so. Do you understand? Please, do you understand?
Yes.
Do you
You
understand?
that as it.
Aha,
You.
atase that nine. 9. You people don't understand French. I would have tried my. Do you understand French? Ko sample la pasala bola
Yes.
poa. Ko sample la pasala
Yes,
bola
yes.
poa. Do you understand that?
That's
Oh,
not
French,
French.
na
That's
yɛbaako
not
pɛ.
French.
You
French
you
na
you
yɛbaako pɛ.
you don't understand French, so
French nyinaa yɛ one.
I have to put it somewhere. But even if you don't understand ko sample la pasala bola poa period,
Yes, we do understand.
then
We do understand.
then when I use it,
No
you
problem,
understand.
process.
So anybody
No problem, process.
anyone who
Moving
can
this
explain it in
process.
Ghana for us? I'm an Accra land now. Ga. Either the Ga or the Ga language. I mean, I know you have two types. Any of them. Ga. Hey, Ga manche we hear this. So explain in Ga. Oh, let me check if I will see Na or Ayele Ashoko. Those people. I'm not seeing any Ga name on the platform. Like seriously. Okay, no problem. If all the guns are running away, no problem. Let's go to Ever. Ever, I've seen, since I see any eloquent, people have started changing their names, so they have started changing. Ah, so there's no Ever 2 on this platform. Like, seriously, I'll check if there's any divine. Amel, Tempo. Are you not an Ever? By the way, I want you to own it. You understand? You have to be able to explain it in your own words, because anytime they ask you to explain a recognition criteria and you get to financial asset at fair value through profit or loss, you should be able to explain in your own words. You cannot explain financial asset at fair value through profit or loss and ignore the option to designate a financial asset at fair value through profit or loss. So anybody at all, my friends from the north, anybody at all, can explain in his local dialect, at least 1 or 2 let's go. Fast. Madam Cynthia, are you not an Ever? People are just running away. And because I don't know them, I've seen Jocelyn. Madam Jocelyn. Madam Jocelyn. But it's not the Jocelyn I know. Okay. Hey, Namusana
Sarah
Muti.
Bell, Sarah Bell,
Yes.
I'm here.
Yes. Okay, can you explain in Ever for us the option to
Hey,
designate a financial asset at fair value through P&L?
Sarah Bell, no.
Oh, but do you understand what we are doing?
Sarah Bell, I joined not long.
Okay. Honorable Eunice, you can speak for us. You can unmute and talk.
Okay, I want to try in Ghana and see.
Okay.
Ke company ko ke AI financial assets. Ni efe drama ke ekeba ma financial assets at fair value through other comprehensive income. Enye echakemo edremo ejake eba kosi accounting mismatch. Right.
No, I heard financial asset at fair value through OCI.
Other
You're talking of
comprehensive income.
No, we are talking of financial asset at fair value through profit or loss.
Oh, okay.
That is the one that we have the option to designate at fair value through P&L.
Oh, okay. But
Mhm.
wait, maybe I don't really understand. But you are saying that if a company buys financial assets and decides to put it under any of the types, it can't change its mind later because it will
No,
cause
that's
accounting
not what
mismatch.
I
Or
said. No,
oh, okay,
I'm saying that if a company buys a financial asset and
yeah,
recognizing it under any of the first two, an amortized cost or OCI, if it will cause an accounting
okay,
mismatch, then
yeah,
it will classify it as fair value through profit or loss. But this decision, once you take it on initial recognition, you can't change it again.
oh,
Once
okay,
you recognize a financial asset at fair value through P&L, by virtue of an um an option to designate, that is by virtue of you designating it to P&L, then you cannot change your mind. It can be reversed. So whatever you said is okay, just the OCI ahead should be fair value through profit or loss. Oh, you are done. Oh, you are done. Oh, you are done.
okay. Please. So you said if they cannot put it under financial assets at amortized cost or other comprehensive income, and they decide to put it at fair value through profit and loss, they can't change their mind. Is that what? I
Yes,
don't
that
know.
is on initial recognition.
Okay, okay,
You can't,
okay,
it's a decision that cannot be reversed.
okay, okay. Thank you.
Okay. So, hey, so the others you won't talk. Okay, I be we are here. I've checked, I'm not seeing any name called Divine. Okay, Rob.
Say,
Uh-huh.
please, I'm back again. Then it means that your last explanation you gave right now brings gives me more better understanding. I want to find out. So, for instance, if I have a financial asset and the right place for me to classify it is financial assets and the amortized cost, but if I classify it over there, it will cause accounting mismatch. Then it means that I can't classify it over there, but rather I should bring it under financial asset through profit or loss. Is that the
Yes,
case?
yes. But once you
And if
take
I
that
bring it,
decision, you can't change your
I
mind.
can't change it. Okay. Okay. Thank you.
Welcome. All right. So I believe that you all understand. So let me write, because of time, let me write it the way it is, the standard. Then we'll look at equity investment. Then from there, we need to pause and now go and pick set of questions and check whether we can be able to identify that, oh, this one is at amortized cost. Oh, this one is through OCI. Oh, this one is through P&L. Did you get it? Okay. So on initial recognition, on initial recognition, an entity may, by an irrevocable election, may by an irrevocable election, irrevocable election, opt to designate financial assets, financial assets at fair value through profit or loss. If doing so, If doing so, eliminate or reduces a measurement inconsistency. A measurement inconsistency. Also known as accounting mismatch. Also known as accounting mismatch. Asam na ɛda hɔ no. Yes. Yes. Any question? There's no question. So you are fine. Okay, now let's go and look at equity investment. What about equity investment? Can we also classify equity investment into three? That's what we want to do. Can we classify equity investment into three? Equity investment. Equity investments are classified into two. Equity investment cannot be measured at amortized cost. Hello.
Hi.
Equity investments cannot. Equity investment cannot be measured at amortized cost. Who can tell us why? Who can tell us why? Amortized cost, the purpose is to receive contractual cash flows, which are mainly.
So they are for trading.
No, I'm saying that why is it that it cannot be measured at amortized cost? Please, do you get it? And I'm saying that amortized cost, we expect the cash flow to be principal plus interest. Is that not it?
Because you cannot redeem the principal.
So once you buy shares, the company that you buy the shares, you do not have the right to go for your money from the company. Is that not it? Even the ordinary dividend is not fixed. Is that not it? So amortized cost is out. It's out. One will ask, but at fair value through OCI 2, there should be principal and interest. Is that not it? That should be your question. Is that not it? Hello? Hello?
Hi.
I'm saying that the reason why we cannot measure equity investment at amortized cost is that equity investment does not pay fixed interest, does not pay fixed dividend and principal. I'm saying that if this is the reason, then when it comes to financial asset at fair value through OCI 2, that one too, there should be principal and interest. Is that not it?
Yes.
Yes.
So why are we not excluding that one too? That should be your question. The answer to that question is that the recognition at fair value through OCI will be on condition. Hello, I tell you to be on what? Condition.
The condition.
The only point an shares or equity investment is recognized at fair value through OCI is if it is not held for trading and the entity has an option to designate the financial assets at fair value through OCI. Please, you get it? So let's start. Let's look at it. Number one, we have equity investment at fair value through profit or loss. Equity investment at fair value through profit or loss. We are saying that this one, two issues. If it is held for trading, it's the same as holding an asset for speculation purpose. If your intention is to buy the asset and trade in it, then it can only be at fair value through what? Through P&L. That one, you can't have an option to take it anywhere. Did you get it? Hello. Let me first even state that financial equity investment at fair value through P&L is the default method. When I say is the default method, do you understand? When I say the default method, do you understand?
Yes,
Hello?
sir.
It means
Yes,
that
sir.
whenever you buy
No, sir.
shares, it means that whenever you are, if you open your browser and they tell you that you want to use Firefox or Chrome as your default browser, what does it mean?
It means that anytime you want to search something, you're going to use Chrome or Firefox.
Thank you. So this one, to anytime you buy shares, the default method is fair value through P&L. Whenever you buy shares, you should be treated as fair value through or P&L. But we are saying that if it is held for trading, then it's compulsory. It cannot be any other classification other than fair value through or P&L. Did you get it?
Yes, sir.
So held for trading. It's the same as speculation purpose. So it is measured at fair value. This one I'm just adding some measurement to it. It's measured at fair value. Measured at fair value. And then changes in fair value. Changes in fair value goes to P&L account. Dividend income. Dividend income also goes to P&L account. Now, under what condition will it be at fair value through what? OCI. Now, let me set the first tone. Once you buy shares, whether it is for trading or not, it can be treated under fair value through P&L. If it's held for trading, then it's compulsory. But if it is not held for trading, then you can treat it on a fair value through P&L, or if you think that it will treating it in a P&L will create an accounting mismatch, then you can have an option to designate it as fair value through what? Through OCI. But the condition should be that one, it is not held for trading, and two, there should be an option to designate at fair value through what? OCI. There should be an irrevocable election to do so. You cannot reverse that decision. So, at what condition? On what condition are you going to have equity investment? Equity investment at fair value through OCI. Through OCI. Through OCI. So now, fair value through OCI. Let's move. Number one, where the shares are not held for trading. Please, it does not mean that whenever the shares are not held for trading, it's at fair value through OCI. No. It can be at fair value through P&L or through OCI. That is, the P&L is the default method. But the true OCI comes with a condition. Number one is if it is not held for trading. Number two is that you must have an irrevocable election to designate it at fair value through OCI. Did you understand? Did you understand? There should be an irrevocable election to designate equity investment at fair value through OCI. So sometimes the question will write under the requirement that the entity recognizes financial asset at fair value through P&L if it is required to do so. If it is required to do so, it means that if it is not held for trading, the standard does not make it compulsory. Required means that compulsory. If it's not held for trading, the standard does not make it compulsory to treat it under P&L. So, if the company has a policy to say that they only treat at fair value through P&L if it is compulsory, then it means that you recognize financial asset at fair value through P&L only when it is held for trading. Per the question. It means that whenever it is not held for trading, you have to go for fair value through OCI because it is not compulsory now to treat it under P&L. The financial instrument, this is the difficult aspect. When it comes to those calculations, that one is not difficult at all. This is where the problem is coming from. If you do the wrong classification, everything is wrong. Okay. Now, once there is an irrevocable election to designate it as fair value through OCI, then, as usual, it will be measured at fair value. Measured at fair value. The changes in fair value will go to OCI. Will go to OCI. And then going to OCI means that it will be debit or credit the equity investment then you debit or credit the capital surplus. So because it's an other comprehensive income item, we have to show it under equity, and the right account is the capital surplus in this case. Now, remember, dividend income, because it says the ordinary dividend that you receive, that one will still go through profit or loss account. Why? Because this one is a realized gain. This is a realized gain. It's a realized gain. So dividend income will still be in the profit or loss account. Now, when the asset is sold, once the asset is sold, then any cumulative gain or loss in the capital surplus is now transferred to the retained earnings account. Did you get it? When the financial asset at fair value through other comprehensive income is sold, the cumulative gain or loss in the capital surplus is transferred to retained earnings, to retained earnings. So we call this reclassification. It's only when the asset is sold that the fair value gain or loss becomes what? Realized. So you now take it to what? To retain earnings account. So you take note. The only time shares are recognized at fair value through OCI is one, if it is not held for trading, and two, there should be an irrevocable election to designate the shares at fair value through what? OCI. Very, very important to me. So similar issue applies to financial liability. Financial liability, there we have two classifications, at amortized cost and at fair value through what? P&L. So if the characteristics of the cash flows is principal plus interest on principal outstanding, then it's at amortized cost. It's financial liability at amortized cost. Anything apart from this is financial liability at fair value through profit or loss. That's all. It's not difficult at all. The most important thing is the asset one. To understand the asset one. Okay. Let's go and do some exercise. So this time we are not going to work anything. We want to pick series of questions. Want to pick series of questions, or if possible, about 15 or so questions that we are going to solve. And check, okay, this question is at amortized cost. This one is at P&L, fair value through P&L at OCI. Wrong classification means you get zero. You get zero. No credit back. Okay. Let's start with the one we did for radar. Radar. Radio.
Radio.
Now, Riddle number 1. I am a financial asset. I pay fixed rate of interest and principal on maturity. The one who owns me loves me so much and will always keep me up to maturity. Which financial asset am I? The one who owns me loves me so much and will always keep me up to maturity.
Financial asset at amortized cost.
Financial asset at amortized cost. At least some teaching and learning has taken place. Okay. It is financial asset at amortized cost because 1, the purpose is to receive contractual cash flows. And the cash flows are mainly interest and what? Principal. There's no intention to sell it anytime before maturity. Is that not it?
Very true.
So you take note of that. Riddle. I am a financial asset in the form of shares. The one who owns me is keeping me to make profit. I will be sold immediately. The owner sees that I will fall in value. I am currently being kept here because he expects me to increase in value. Which financial asset am I?
Financial asset, how true profit and loss.
Financial asset at fair value through P&L because it is held for what? Trading. Is that not it?
Yeah.
Yes.
Okay. Riddle. I am a financial asset in terms of bonds. That is a loan investment. And I pay fixed rate of interest on principal. The one who owns me wishes to sell me out anytime he wants. The owner is keeping me currently because he has not gotten the need to sell me now. I know my days are numbered and I will certainly be sold before maturity. Which financial asset am I?
Financial assets to other comprehensive income.
OCI.
Financial asset at fair value through what? Through other comprehensive income. So that's correct. All right. I think the other riddles, we've looked at it under IAS 32. Is that not it? The 3 to 10. Okay. This one is just to provide you with understanding of the concepts. Oh, this one I shouldn't have added answer. So let me stop sharing. And then I will read for you to answer. Please listen to me with rapt attention.
You are not sharing.
Yes, because I don't want to share. Because it's like I've added the answer. Otherwise, you see the answer and tell me.
Oh, even the one you started, you are not sharing.
I wasn't sharing.
Yes.
Oh,
Yes.
okay. Okay. Then let's keep it like that. I thought I was sharing. Sorry for that. So this is the one we're doing now. The read 1, read 2, and then read 3. Okay. So I thought I was sharing. Now, let's look at some analytical questions about 5. ABC Limited acquired 50 million equity shares from XYZ. The shares were acquired for speculation purposes. Explain with reasons how ABC should classify the equity shares. Yes, who can help?
ABC can classify it on fair value through P&L, and then
Your voice is gone. Who is talking, please? Somebody else can talk. We've lost him. Oh,
XYZ can classify.
okay, you a minute, a minute. Let me resave the document and delete the solution so that a minute, I'm deleting the solutions.
Okay.
All right, so let's go. So let's go. Um, I believe you have seen the question now. ABC acquired 50 million shares from XYZ. The shares were acquired for speculation purpose. How should the ABC classify this and why? I mean, explain fast. Hey, with what we've learned so far, the word acquired means that it's a financial asset, right?
Yes.
Okay, so what type of financial asset and why? We know we have equity investment. I want to know, is it
it will be
measured at fair
financial.
value or through OC? Oh,
It will be classified under
Fair value.
profit and
Fair
loss.
value to P&L.
Through profit and loss.
Financial.
Why?
Sorry.
Speculation means it's
Let
held
me
for trading.
Why? Because it is held for what? It
Trading.
is held for trading.
Trading. Speculative.
IFRS 9 requires that
P&L. Fair
if it
value
is held for
P&L.
trading, then it is compulsory to measure it at fair value through what? P&L. Okay.
P&L.
Question 2. One Time Limited acquired 40,000 equity shares on 1st January 2018. One Time has no intention of trading in these shares. So how should it be treated?
Fair value through OCI.
So you don't answer the question like that. I told you that if it is not held for trading, it can be both fair value through P&L or through what? OCI. Fair value through P&L is the default method. Through OCI will come as a result of a condition. Did you get it?
Yes, sir.
Yes, sir.
So you state that the equity shares would normally be treated as fair value through what? Through profit or loss. You state it that way. Then you come and state that since it is not held for what? Trading, the entity can also make an irrevocable election. Or you can say the entity can take a decision that cannot be reversed. That's the meaning of irrevocable election. The entity can make an irrevocable election to recognize it at fair value through what? Through OCI. Please get it. This is how you should answer it.
Yes, sir.
One, you say that it can be measured at fair value through what? Profit or loss. That's the normal way.
P&L.
It can normally be measured at fair value through P&L. But since it is not held for trading, they may also recognize it at fair value through what? OCI, on condition that they make an irrevocable election to do so. Please, do you get it?
Yes, please.
Yes, sir.
It's very important you understand these basics. So if the question says that, you can also say that where the entity has a policy of recognizing financial asset at fair value through P&L, only when it is compulsory, then it can be measured or it should be measured at fair value through OCI.
Okay.
And there should be an irrevocable election to do so. Okay. Because some of these financial instrument questions, I would prefer the requirement to be explain and show. Explain and what? Show. So the explanation is about the recognition criteria, and the show is the extract. Explain and what? Show. Let's go to question 3. On 1st October, Benedicta made a 3-year 8% loan of 20 million to Bengal. Benedicta will receive a fixed number of shares in Bengal in full settlement of the loan. Bengal has no liquidity problems as it has paid all interest due. How should this be treated? Yes. Yes. How should this be treated?
So financial assets at fair value through OCI.
Why?
Because she is holding it to receive contractual cash flows from Bengal.
At amortized cost,
Amortized cost.
because he's receiving the interest and he will receive the principal as well, but it will be settled in shares.
Money now. When we say that you are going to be paid principal, we mean cash.
Okay.
So the
It's a
principal
corporate financial instrument.
will not be paid. It means that in this instrument, they will only pay interest. Masa Enfa company ma. They say Benedicta made. So we are talking of financial assets. We are in the books of the buyer. Take note. Compound is only in the books of the issuer winning now. Now, we are saying that when we say interest and principal, we're talking of cash flow. As we said, we say cash flow test, the characteristics of the cash flow. So shares and cash flow. So it means that in this instrument, Benedicta will only get interest at 8%. And at the end of the instrument life, get 20 million worth of shares, right?
Yes, sir.
So there's no principal. So how should it be treated?
So equity at fair value through P&L.
Money now. Benedicta bought
OCI.
loan. He bought a loan note. It should be at fair value through profit or what? Loss. I getting it. Yes, it is a financial asset at fair value through profit. Why? Because it does not give rise to cash flows that are mainly interest and principal. Yes, the interest is there, but there's no principal. If it pays interest plus principal, then it cannot be at fair value through P&L. Then now you have to go and check the business model objective to check whether it will be at amortized cost or it's at fair value through OCI.
OCI.
Is that clear?
Okay, yes, sir.
Okay. Number 4. On 1st April 2015, Mensususa Limited acquired an equity investment in Santra
Boss, please
for.
scroll up.
Is that what?
Please scroll up. You can see.
Okay. Are you see now?
Yes, sir.
Okay.
4 or 5?
Question 4.
So let's
On
calm
first,
down.
you should calm down again.
Yeah, I see only the 5.
Hey, China, when you know, I did with Nina, I'm seeing all. I'm showing all here. Friends, are you not
Yes,
seeing
sir.
both 4 and 5?
We can see.
Okay. Senior, then sort yourself out. Okay. On 1st April 2015, Mensususa Limited acquired an equity investment in Santra for 2 million. The acquired means that financial assets acquired. The investment did not give Mensususa control or significant influence over Santra, but the investment is seen as long-term one. Explain with reasons how Mensususa should classify the equity investment. Number 1. Oh, Sanamuti. So there's no principal, there's no interest, right? This one is equity
Yes.
investment, no principal, no interest. So the default method is that once you buy shares, it's at fair value through what?
PNL.
No.
Through profit or loss. So you say that it has no principal or interest. And because it's equity shares, the default method is what? Fair value through profit or loss. So it will normally be measured at fair value through what? Through profit or loss. Did you get it?
Yes, sir.
Then you now come and add something. Because it is in a long term, it means that it is not held for trading. Do you agree with me?
Yes.
Yes.
You buy an instrument and you intend to hold it for the next 5 years. Can we say it is held for trading?
No.
No. Once it's held for trading, then it's short-term investment. So because it is in a long term, then it means that it is not held for what? Trading. So the entity can make an irrevocable election to designate it at fair value through what? Through OCI. Do you understand? Do you understand?
Yes,
Yeah.
sir.
See, they can give you a question that you are not supposed to do any calculation of. You're only supposed to explain. I love that. Explain.
How many marks?
Asking me how many marks. Maybe 5 marks, 6 marks, 7 marks.
Hey.
Yes. So you have to think about it well. Once you have shares, the first statement you make is that it should not, because if it is held for trading, there is only fair value through P&L. So once it says, the first statement is that once it's equity shares and it has no pay principal and interest, then the entity should normally classify it at fair value through what? Through profit or loss. Then you now come and check. If it is not held for trading, then you can say that because it is not held for trading, the entity can have an irrevocable election to measure it at fair value through OCI as well. Did you get it? Did you get it?
Yes, sir.
Yes, sir.
Makande ya chiro onipa. Question number 5. Question 5. XYZ loaned, underlined, loaned. Loaned. Is it financial asset or financial liability?
Liability.
Money now.
Assets.
Money now. This verb is very confusing to students whenever we use it. So XYZ loaned. If you were in the books of the issuer, they would have said that XYZ borrowed. Borrowed is different from loaned. If I count you that loan me 50,000. Loan, I get it. Loan me 50,000. Let's say Faustina. I went for I said, Madam Faustina, loan me 50,000. Then the statement will be that Faustina loaned Robert 50,000. Faustina loaned. The verb is what? Loan. Loaned. Are you? A asset, not quite liability. Everything is from zero. If it's a liability and you treat that an asset, everything will be zero. Maka de ya chiro onipa. So XYZ loaned an amount of money to PPP Limited on 1st January 2020. The loan interest is payable at 5%. At the end of the 3 years, the loan note is redeemable at a premium. How should XYZ recognize this transaction? Or how should the asset be classified?
Financial asset at amortized cost.
Financial asset at amortized cost. Why? Because 1, it pays both interest and what? Principal. And then 2, the purpose is to keep the asset up to maturity to receive contractual cash flows. There's no intention to sell. Is that not it?
Yeah.
Okay. So I'm done with these things. Aka de ya chiro onimpa. Maka de ya chiro onimpa. Opafa. Okay. So question 1, 2, 3, 4, 5 or so. I think there was one that we said is so question 2. Let's look at question 2. Please, you see, the exercise we are doing is very important. It's important than picking questions. Let's all question this, question that. And then when you are being given a question, you don't know whether it's a financial asset or a financial liability. You don't know whether it is a financial asset at amortized cost or at fair value through P&L or at fair value through OCI. If that's the case, then it's cost 90. It's zero. It's zero. You have not taught anything. You must get this concept well. We are in 22nd November. We know from now to before we start class on the 6th December. For the questions we'll solve, so don't worry. Don't worry. Let's get the concept. Question 2. Somebody should read question 2 for us. Before we go through these questions to identify the conceptual issues, let's go to the board and take the pictures. Please you get it so that we don't forget. Or today you don't want to take a picture.
You want?
So today there are no pictures. So page 1. Let me off my video. So page 1.
Yes.
Can I move?
Yes, sir.
Okay, page 2.
So
Can
you
I
can
move?
move.
Okay.
You can move, sir.
Okay.
Yeah, done. Yeah, done.
Okay. So that is that. Okay, so let's go back to our 24 questions and then see whether we can really do the classification if no one is helping us. Question 2, somebody should read for us. Question 2, someone should read for us.
Question 2 required. How will this be reported in the financial statements of Jack Limited over
Yeah,
the
so
period
we are
to
interested
redemption?
in just the classification. Okay, so let's read. Just read.
On 1st January 2011, Sheila Limited issued a deep discount bond with a 50,000 nominal value. The discount rate was 16% of nominal value, and the cost of issue were 2,000. Interest of 5%. Nominal interest of 5% nominal value is payable annually in arrears. The bond must be redeemed on 1st January 2016 after 5 years at a premium of 4,611. The effective rate of interest is 12% at par.
Okay, so 12% per annum. So now let's ask a question. Because of the word issued, it means that we are in the books of the issuer. Is that not it?
Yes, sir.
So you can see that the holder has the right to only redeem. There is no right of conversion. So because the holder has the right to only redeem by cash, this is a financial liability. You know that?
Yes.
Okay.
Yes,
Now,
sir.
what type of financial liability? Is financial liability at amortized cost?
Cost.
Financial liability, we have only two. Financial liability at amortized cost, that is if it has principal and interest. And then financial liability at fair value through P&L. If it does not meet the amortized cost criteria. Did you get it? Okay. So this one will be financial liability at amortized cost. You state, before you start solving, you see that this is a financial liability at amortized cost because the contractual cash flow is mainly principal and what? Interest on principal amount outstanding, full stop. Let's go to question 3 was compound, 4 was compound, 5 was compound. Okay. Let's go to question 6. We only want to classify. On 3rd January 2011, Thomas bought 100,000. The underlying word is what? Bought. So we are in the books of who? Who is Thomas?
Buyer.
The buyer. So we are talking of financial assets. Thomas bought 100,000 5% bond for 95,000. Incurring issue cost of 2,000. When it was at a discount, we'll come to those things. We'll come to measurement in our next meeting. Interest is received in arrears. The bond will be redeemed at a premium of 5,960 over nominal value on 31st December 2013. The effective interest rate is 8%. The fair value of the bond was as follows. Explain with calculation how the bond would have been accounted for over all relevant if 1. The business model is to hold the bond up to the redemption date. So what type of financial asset will be this?
Financial asset.
Financial asset at amortized cost.
That's what? Amortized cost.
Okay.
Yes.
Okay, B. Normal business model is to hold the bonds until redemption, but also to sell them if investment with higher returns becomes available.
At fair value through OCI.
Other comprehensive income.
At fair value through OCI. Then C. Thomas' business model is to trade bonds in the short term.
P&L.
Financial asset, profit or loss.
Yes, financial asset at fair value through P&L. If the intention is to trade, once it's held for trade, then compose with fair value through what? P&L. Okay. Question 7. Question 7, the day have already indicated whether we go for amortized cost or fair value. I want one that to not be clear. Okay, question 8. Bismarck prepares, so whether you can take us through question 8.
Question 8. Bismarck prepares financial statements to 31st March each year. The following events have occurred, which are relevant to the year ended 31st March 2018. On 1st April 2017, Bismarck loaned 30 million to another entity. Interest of 1.5 million is payable annually in arrears.
So pause
An
for
additional
us.
final
Pause for us. Bismarck loaned. So who is Bismarck?
Buyer.
So we are in the books of the buyer. So we are going to deal with financial assets. Is that not it?
Yes,
now let's continue. An
additional final payment of 35.3 million is due on 31st March 2020. Bismarck incurred direct cost of 250,000 in arranging this loan. The annual rate of interest implicit in this agreement is approximately 10%. Bismarck has no intention of assigning this loan to a third party at any time.
Explain and show how the event should be treated. So tell us, please. How should the financial asset be classified and why? So ask yourself, is there principal and interest?
Yes, sir.
So it means that fair value through P&L is out. Is that not it?
Yes,
Now,
sir.
what is the business model objective? The business model objective is to keep it up to maturity. They even made it clear that Bismarck has no intention of assigning this loan to third parties anytime. So it means that they have no intention of selling it. Please, do you get it?
Yes, sir.
So it should be at amortized cost. You say that this should be measured at what? At amortized cost. This is a financial asset at amortized cost because the business model objective is to keep the loan investment up toward maturity. And the characteristics of the cash flows are mainly principal plus interest on principal amount outstanding. Full stop. That's all. Before you start solving the question, explain. I like questions with explain and what? Show. Explain and show. Explain. Explain and show is different from explain. It's different from show. Explain and show me that there's an aspect to the question that you cannot put it in figures. That's what we say you should explain. And the one that you can put in figures, they say show. So that show the relevant extract. Show. Explain and show. Okay. Do you understand?
Yes,
Do you
sir.
understand? So all pick
Yes,
questions
sir.
and we are solving. You will get it too. Let's go. Number 10. Question 10.
Question 10. Joe Honey prepares financial statements to 30th September each year. During the year ended 30th September 2016, Joe Honey entered into the following transactions. On 1st October 2015, Joe Honey made a 3-year loan of 10 million to Onetouch. The rate of interest payable on the loan was 8% per annum, payable in arrears. On 30th September 2018, Joanne will receive a fixed number of shares in Onetouch in full settlement of the loan. Onetouch paid the interest due of 800,000 on 30th September 2016, and Onetouch has no liquidity problems. Following payments of this interest, the fair value of the loan assets at 30th September 2016 was estimated to be 10.5 million. Required, explain and show how the above transaction will be reported in the financial
And
statement.
show. Explain and show. How should it be treated? So you start. Johanny made. We are in the books of Johanny. Johanny made. Johanny made. Johanny made. So is Johanny buyer or issuer?
Buyer.
Issuer.
Money now. Money now.
Buyer.
Because he issue and money now. Made a loan, meaning you are the one giving out. You are the buyer. Okay. So financial assets. Now, one. Is it at amortized cost?
No.
Why? Because it pays only interest. Is that not it?
Yes.
Once it's paying only interest, then the characteristics of cash flows does not meet the criteria for amortized cost or fair value through OCI. It should be treated at fair value or should be classified at fair value through what? Through profit or loss. Because the principal will be paid in shares. It's not in cash. We are talking of the characteristics of the cash flows. cash flows. Cash flows that will be received.
Cash flow.
If it is only interest, fair value through P&L. If it is only principal, fair value through P&L. But if it is principal plus interest, then we need to go and then check the business model objective to see whether it is at amortized cost or at fair value through OCI. Are you getting the concept?
Mm-hmm.
If you get the concept wrong, there's no need learning the calculation. The concept you are learning is more important than the calculation. But if the concept is wrong, you get 0. Yes, you get 0. Okay. Makan the yachro. Number 11. Now let's go.
Number 11, Eunice prepares financial statements to 30th September each year.
So, madam, pause for me. This one, you will be the one to answer. As I overcome my you also answer some. Friends, what do you think? She for answer
It's
some,
fair.
no, so.
It's fair.
As those who have been drumming in church, to post I'm on offering. Oh, and now they are different. Now they are doing well. They are doing well. Okay, let's go.
Eunice prepares financial statements to 30th September each year. During the year ended 30th September 2016, Eunice entered into the following transaction. On 1st October 2015, Eunice purchased an equity investment in entity Y for 12 million. The investment did not give Eunice control or significant influence over entity Y, but the investment is seen as a long-term one. On 30th September 2016, the fair value of Eunice's investment in entity Y was estimated to be 13 million.
Madam, so explain. One can I explain? Eunice purchased, so we are in the books of the buyer.
Yeah.
So what type of financial asset is this and why?
So it is fair value through other comprehensive income.
Why?
Because I think in the end, she will get her principal and interest back.
Madam. Eunice purchase equity investment.
Yes.
Equity investment. Equity investment, does it pay fixed dividend? Is the principal also guaranteed?
No, sir. No.
Madam, I'm surprised because I've answered this question as part of the riddle questions. Friend, do you remember?
Yes, sir.
So we said that once it's equity investment, it should be measured at fair value through profit or loss. You say that equity shares, your statement should be that equity shares does not pay interest and what? Principal. And for that matter, will normally be treated at fair value through profit or loss, full stop. Then you say that since the investment is made in the long term, or since the investment is seen as a long-term one, then it is not held for what? Trading. The entity can also make an irrevocable election to classify it at fair value through what? Through OCI. Then you treat it. So in your measurement, you show at fair value through P&L how it looks like. then fair value through OCI, how it look like. But I remember this original question. They can add something that, okay, the entity measures financial asset at fair value through P&L if it is required to do so. Once you see that statement, then it means that you cannot measure it at what? At fair value through P&L. You say that since the entity measures financial asset at fair value through P&L when it is required, only when it is required, then it should be measured at fair value through what? Through OCI. Because it means that once it is not held for trading, the standard does not make it compulsory to treat it as fair value through or P&L. So the entity will go for fair value through OCI. The concept is very important. Okay. Arida, sorry for putting you on the spot. Okay, let's go to question 12.
Question 12. Ashie prepares financial statements to 30th September each year. During the year ended 30th September 2016, Ashie entered into the following transactions. On 1st October 2015, Ashie made an interest-free loan to an employee of 800,000 Ghana cedis. The loan is due for repayment on 30th September 2017, and Ashie is confident that the employee will repay the loan. Ashie will normally require an annual rate of return of 10% on business loans.
So let me come here. Interest-free loan and subsidized loan, we treat it separately. But the concept is that once you give an interest-free loan, we are seeing that there's nothing like interest-free loan in accounting. The accounts people will say that there's no free lunch. There's nothing like free lunch. If they ask you to go and take free lunch at Royal Fiesta, I believe you won't fly. There's a cost. You will buy miss, pay some TNT to go there. Here we are saying that there's nothing like interest-free loan. So we are going to recognize a loss on the loan. The interest that the person is not paying will be recognized as a loss. We find the present value for this 800,000, and then that will be the loss. We discount using the 10%. Then after that, we now amortize. We do it like the amortization. The loss is now amortized in the form of interest that we are receiving. So when we get the interest-free loan, we'll look at how it should be dealt with. The question taking the subsidized loan, we'll look at that one. So this should be your assignment. Question 14 up to the last question. Some of them you have to know because it's on impairment. Let's say up to question 20. Is it 20? Yeah, up to question 19, 14 to 19. Just go and read and check whether you will know whether it's amortized cost at fair value through P&L or financial liability at this. Get to know if there's any of them that after reading you didn't get the concept. When we meet, let me know, then I'll explain it. Because Monday we are just going to look at the measurement. That one, few minutes I'll finish, then we'll start solving questions. So Monday alone, we can solve like 7 questions. Oh yes, Monday alone can solve about 7. Tuesday, next year, Monday to Wednesday, we will solve plenty questions. So if we leave you, you'll be in trouble. That is, if you don't get the concept before we start solving questions under the measurement, you'll be in trouble. Okay. I believe you will go and read and look at it. Because as I'm doing it with you, it's as if you understand. But maybe if you go and look at it and you don't understand, you come and ask me, then I'll answer. Did you get it?
Yes, sir.
What I
Yes,
mean is
sir.
that doing all the concept with you, I wouldn't get a feedback whether you understand or not. But go and then look at it. Then come and tell me, say question 16. I was confused whether it's as this or it's as that. Did you get it? Okay. Those who have not printed the questions, please print them because Monday to Wednesday we will solve a lot. We are praying.
Hello, sir.
Yes, sir, boss.
Today, my internet have been messing up from morning till now. So I'm just praying that the videos will be uploaded so that man
So let
can
me check
go
something.
through as you are saying.
Yes. So I think since the YouTube one is delayed, let me see. I will see how best I can share a Google Drive with you. The fear is that don't be sharing it around. Oh, no, no pesa. So I'll work on it for you. Is this
Okay,
Wilfred?
thank you, sir. D. Joseph.
Yes,
Okay.
please.
Yes, in
Yes,
Wilfred.
please. No. It wasn't Wilfred speaking. My question was centered on what my brother just said. But sometimes we want to watch the videos because it is the 3 years ago videos that I've been watching in order to get an understanding of whatever that we do here. So I would be very grateful if the
Yes,
video
so
is
we're
being
trying to get it
treated for us.
for yes. We're thinking about you. We're trying to get it on YouTube. So that you know YouTube, once you watch a video and you download, you can always go and watch offline without data. That's what we were trying to get for you,
Yes,
but we are
that is what
having
I
some
do.
yes. So we are having some few issues that we fact we thought Telegram had that option, but we realized that Telegram when you download, you still need data to watch. But I think in the meantime, let me get you the Google Drive link. Then you start watching whilst we work on uploading on YouTube. All right. Thank you so much. I think I owe you about
Okay.
3 or 4
Hello, sir.
videos. Yes, I was.
Hello, sir.
Yes,
Yes.
I was.
Please, I need the PSA textbook.
Okay, so kindly WhatsApp me. Let me give you my line.
Okay. All right.
0549573161. So you can buy the IFRS book. You can buy the CI volume 2. You can buy the FR volume 2. You can buy the PSA book. You can buy the PSA diary. But the PSA book goes to the diary. You must buy the 2. You can buy ME. You can buy FM. The advanced tax will come by 6th December. We'll have the advanced tax. So these are the books that you have, and they are very the best books you can have. So you WhatsApp my line to place your order. Those who want to register for the class and start watching the videos too, please do WhatsApp me. I'll send you how to register so that you can start taking your lessons.
result.
Yes, I'm talking to those who perhaps are not waiting for results.
Sir, any updates, Sir Robert?
No, the
Any
results
update
they
on the
ended.
result?
Results in the account 8 days, however. If you cry,
Oh,
results
oh,
they
okay.
ain't ready. I ain't know. I ain't ready.
Hey,
Oh yes. So hopefully by close of next week, not this week, the following week. We are in 22nd. So this week I can come. So
How
either
this?
by the end of this week or yes, this week he can come. So either by
So
the
use
end of
one
this
with
week,
you.
either by the end of this week or
the
during
beginning of
next week. Yes, next 2 weeks, the about theory. Once they happen to have cancer making pack, it will be released. It will spoil
The
your
PSA,
Christmas.
we did well, eh?
Let's hope for the best. All right. All right. So
Hello
please,
there.
that is it. Yes.
So please, I would like to know if the standards that we are studying, we have some of the standards that are allotted to the level 2, or we have to study all the standards before the exam, because it is my first time that I'll be
Yeah,
writing the
so
FI,
all
and I
the
want to know
standards,
if we are studying
all the standards, to the exception of employee benefits and then service payment, all the standards are also in level 2. Just that I can set a question on IA 16 for level 2, and I'll set another question on IA 16 for level 3, and the difference will be clear. The difference will be clear. I get it. You know, JSS or no, primary, you learn something like 1 + 1 is equal to 2. They say 1 + 1 is equal to 2. When you go to JSS, they say 1 plus, instead of box, they said 1 + x is equal to 2. Find x. They say 1 + 1 is equal to 2. When you went to HHS, they said that by using modulo arithmetic, that is why it is equal to 2. So everything that we have been doing is base 10. That is why whenever it's giving us 11, we write it as 1, 1. I get in the base 10. If it's 19, it's 1 remainder 9. So base 10. So the same thing. But you see, say the CR questions, they will be stronger than the FR one. But what I do is that when I'm teaching, I always take it from scratch, like I'm doing for both. I put the FI and CR student together. They will learn everything in the standard. Because sometimes you would think that the FR one will be cheaper or easier. You go there and Charlie, balls question. So
where can we get the questions to download?
this particular question that we are using.
Yes, please.
No, I sent it on the. Did you join the Telegram page or the WhatsApp page?
No, sir. It's my first time, sir.
So you've not joined any of the pages. So you WhatsApp me. You WhatsApp me.
Okay, sir.
I'll send
Thank
you the
you.
link. Then you join. When you join, we'll repost them. When you join
I'm good.
Telegram, you scroll up. You see the questions there.
Okay.
And all these
Thank
questions I've given you are in the IFRS book as well.
Okay.
So I encourage you get the books too, and then it will help you a lot. All right, shall we pray? Heavenly Father, we thank you so much for learning with us today. We pray that the little we have learned today about the concept of IFRS 9, you continue to grant us the understanding and retentive memory so that in the first week of March, we can be able to reproduce and excel in our exam. This and many more we ask in the name of the Father and of the Son and of the Holy Spirit. Amen.
Amen.
All right.
Amen.
So all the best.
Thank you.
Thank you, Sir Robert.
Welcome. So please, those who want the books, WhatsApp me right now so that we work on your order. And then classes and things you can WhatsApp me. All right, thank you. So I'll be on standby.